Welcome on board the management of Aarti Industries. We've got with us the chairman and MD joining in, Rajendra Gogri. Mr. Gogri, good to have you on the show. Let's begin firstly talking about in the first half the fact that you were unable to pass on the raw material cost pressures to consumers, and that impacted your margins as well. What really is the situation now? We wanted to understand.
No, generally, in our domestic market, we are able to transfer the raw material increase in the same quarter. Export is generally a one quarter delay. Again, but we are generally able to transfer. That's our model, raw material pass-through model.
So can we expect some margin expansion in the second half or the third quarter?
Yes, that impact will be seen. Yeah.
But Mr. Gogri, could you quantify that, the expansion in margin that you're expecting?
No, overall, whatever guidance we have given for the annual, that is what we are looking at, 25 to 35% annual growth rate.
All right, Mr. Gogri, a lot of new capacities will be coming online or on stream in the second half for the pharma business. What kind of growth are you expecting in FY23? What is the full year growth that you're anticipating?
Pharma, we will expect a substantial growth. Both pharma and chemical will have a sizable growth in FY23 and also FY24. FY24, our guidance is around 1.7 to 2 times over FY21.
Sure. What about the CAPEX? How much of it has been spent so far, and by how much do you really plan to spend for, the year going ahead? And also, if you could give us any guidance for fiscal year 23 and the kind of CAPEX outlay that you may have envisaged.
Yeah, this year, total CAPEX around 15 crore is our target for FY22. And FY23 also should be of a similar order. Over these 3 years, our overall target is for 4,500 to 5,000 crore. So FY23 also order of magnitude will be more or less similar.
Sure. So Mr. Gogri, what kind of incremental revenues then are you expecting from the CAPEX?
Yeah, by FY27 we are looking at 2.5 to 3.5 times our FY21 revenue, and 3 to 4 times bottom line growth. So almost 3 times revenue over FY21.
Let's talk about the toluene segment in India. It's mainly untapped and catered to through imports mostly. And Aarti is getting into this segment. Could you give us a little bit more color, a little bit more detail as to what this would imply for your financials? You're entering the segment.
Yeah, we are going to into entire value-added segments of chlorotoluene from basic chlorotoluene itself, and we are looking at about 1,200 to 1,500 crore sales from this segment, both for import substitution as well as export market.
All right, you're talking about 1,200 crore annually, Mr. Gogri?
Yeah.
Sure. Mr. Gogri, there was a sharp drop in your borrowings in the first half as well. We believe that this was because of the QIP. Will your borrowings be around the same levels at the end of your fiscal year 22 as well? And what is your target then for FY23?
FY22 debt should remain more or less at a similar level. But FY23 there will be some increase in debt because of the CAPEX plan.
Sure. We understand that your utilization levels, Mr. Gogri, in the second quarter were around 90% for specialty chemicals. What could this number really be and scale up to for the second half?
Yeah, our older mature plant, will be operating at a similar level, but newer plants are on a ramp up. This second contract commissioning also will be happening in January.
Gogri, so what in your estimation is going to be the overall the utilization level for Aarti?
Yeah, so overall mix, there is no overall number in that sense, basically.
Could you talk to us about your export business? It contributes about 40% of your business. Could you explain to us how the margins are panning out there, especially from the Europe business? Any guidance that you can provide to us for the second half of the financial year for both pharma and specialty segments?
Yeah, generally, export are more valued products, so they get better margins compared to the domestic markets. So, margins will be better in the second half.
Mr. Gogri, there have, of course, been supply chain disruptions, which could be because of the global container shortage. There are, of course, other ones that have also existed where, you've got seeing China Plus coming into play. What has been the impact on your company?
As far as the raw material concern, we are procuring mainly from domestic markets, so we don't have much issues. But export container availability has had impacted, but now I think it is getting eased. So otherwise, we are diverting some of the export products into domestic market.
A question that I know the markets will definitely want an update on. What is the update on the demerger of the pharmaceutical business?
Yeah, that is going through the regulatory process. So maybe take another 6 months or so.
Okay, there you go. That's the update the markets would also want to know as far as the proposed demerger pharmaceutical business goes. Mr. Gogri, it's always a pleasure talking to you. Wishing you, your family, and the entire company, and very, very happy New Year.